the days of manipulating the market, I believe, are coming to a drastic end. You can only manipulate a market for an extended period of time, all the time you're speaking of, by pushing it in the direction that it is going. We have an administration who understands right now that we countries really don't want our treasuries anymore. They don't want it because of weaponization, because of inflation, because we'll never get our balance sheet in order through austerity and the tough decisions. And so you're seeing more and more inflation and a devalued dollar and lower interest rates. I mean, there is no reason that countries would want to continue to hold our treasuries. I think ultimately the lower interest rates backfire and you see much higher interest rates, which destroys the bond market. And the last time, a year or two ago, when they tried to lower the front end of the market, right? The federal funds rate, which they just lowered yesterday by 25 basis points, they lowered it by 100 basis points over a few meetings. That's 1%. The 10-year treasury went up 1%. You're seeing that in the UK right now, 7 rate cuts, and their 30-year treasuries at the highest level maybe ever. Point is that they can control the front end. The back end of the market is controlled by the bond holders, the bond buyers, and they're saying, we don't want this crap at these rates. You want to lower the front end and play these games? Well, we're going to sell our treasuries and our bonds because we expect a much higher return, for what you were signaling is complete and total lack of financial or fiscal responsibility. Once again, you're continuing to print and inflate at the tune of $1 trillion every 100 days. So this is a very dynamic time.
Well,
but I will tell you,
go ahead,
yeah.
finish your thought.
No, I was just going to say, I'll tell you that I truly believe that gold and silver are becoming integral to this administration's understanding
I think so
of
too.
macroeconomics right now.
I think so too. I think their actions are showing that. But
yes,
let's talk about the ability for young people to buy a home. I think this is contributing to civil unrest. If this is not, and I think that's why Trump cares so much to get this interest rate lowered. But you're saying that that itself could trigger the mess that we're in. Now, there was just a stat showing that an average couple could, something like they can only afford a home that's about $248,000. I don't remember the exact number, around that. And right now, the average price is something like $420,000. In order to get them to be able to afford a home, the interest rates need to go down. But that in and of itself is going to create what you're talking about. They're in a catch-22.
not only that, isn't that what created the problem to begin with? When you screw with Mother Nature, there was always that old cartoon, you'll be sorry. Well, that's exactly what this is. You'll be sorry, because lowering interest rates is what got us into this problem to begin with, right? So in essence, you have core CPI inflation right now at 3.1% by their own lying numbers, which, by the way, exclude food, energy, and what? Housing is not part of the CPI, because evidently you don't need to eat or drive or live in a house.
They could throw out all the rest of it and just look at that, because those are the only numbers that really matter. So everything that really matters, they threw out. This is why we get back to the fact that we need to get back to reality. Our value system needs to get back to sensible.
Of course.
That's exactly. We could just look at what they don't include, and that's what's important. Everything that's important they get rid of. It's that same exact statement that our value system is completely upside down right now.
It is. And when you look at stocks and real estate, stocks are at all-time highs right now. Their valuations are at their highest level on record, according to Bloomberg.
But is that inflation?
That's inflation, and that's suppression of interest rates. And the same thing is true with house prices, because first of all, with super low interest rates for all those years, you could not put your money into treasuries earning 1%. The law of 70 seconds is mathematical law. You take the interest rate you have, you divide it into 72, it tells you how long for your principal to double. So why would anyone put their money in a 10-year treasury paying 1 or 2%? At 2%, it takes 36 years for your principal to double in dollars that are losing more than that over 36 years.
5% or something a year. You're gaining 1 to 2%. It's a 3% net negative. It's the
But
same
the same
thing.
thing
Like if
is
gold goes up by 42% this past year, your dollar goes down by 5%, you are losing almost half the value of your
the
dollar.
dollar is down 11% year to date, and the 10-year Treasury, which was paying before it just got notched down a bit, 4.5%.
So what's that
So
delta
halfway through
difference
the
if you would have
year,
had it in gold
seven and
versus
a
the
half
dollar?
percent. Well, you're 7.5% negative real return right now in the 10-year Treasury because of so far halfway through the year. At the end of the year, well, let me rephrase that. The dollar's down 11%. Halfway, let's just say it was one full year at 4.5%. You're a negative real return of 6.5%. And so not a good deal. But if you
But
look at gold, it's up.
contrast that to
Well,
putting it into gold.
gold's up over 40%. And so, there you go. It makes zero sense to buy treasuries right now. And if Trump wants to lower rates even more and get that yield down at or below the CPI number, the big money will never stand for that. They'll dump treasuries like it's going hand over fist. But here's the point. The only way to get home prices, where Trump is mistaken, is all you're going to do is make these young kids far more indebted. And because okay, so the rates are down a little bit, and a quarter point, what good does that? Doesn't do anything. That's 25. That's a
That's
quarter of
I
one
know.
percent.
No, that's
But
nothing.
even still, let's say they were able to get rates lower. All you're talking about is in debt, getting these kids more indebted, because what happens when rates go lower? Real estate prices go higher. What was your home worth at 3%? What's it worth at 7%? What's it worth at 10? So the lower the rates go, the higher the real estate prices go because more people can afford it. There's more demand than supply. The only way to get real estate back in order is to raise rates, because now you have the rates so high and people try to sell their house. Good luck on that, because not enough people can qualify for a loan. It's supply and demand. They're looking at it inversely. Now, if we were starting from a much lower level, sure, maybe lowering rates would be a good idea. But when you're talking house prices that are still at or near all-time highs, because you can't move your mortgage with you. No one's selling, and their values are still much higher. And why are the values higher? This is a big scam in and of itself. Why have they not? If real estate prices have come down because it's such a soft market in Florida and for Texas and all these places, why hasn't the government of these states come in and reassess their property value
That's
lower? Why?
exactly
Because
right.
property
That's
taxes. The
right.
whole thing is a scam. And so you lower rates, you're not going to do anything except raise house prices, because now more people can afford it, more demand than supply, and make another generation even greater in debt. So it's the backwards mentality. Raise rates and blow up the damn system and let it cleanse itself of all of these
It'll be
inequities, all
painful.
of the,
It'll be
yeah, but there's
painful, but it's the
the
only way to clean it
misallocation
up.
the misallocation, Sarah, of resources and the distortion in asset prices because of suppressed interest rates is what got us in this problem to begin with. It's just not learning your lesson.